And welcome. This is Mary Ellen McGonagle with your Friday afternoon MEM Edge show. And this is the show where we bring you where the action is in the broader markets, and quite an interesting start to February. We're going to get into all of that. First up, we are, as usual, going to take a look at the broader markets and see where did we close the week. All of this with an eye toward helping you prepare for not only next week, but beyond. We want to look out further as well. So from there, we're going to take a look at some of those top headline news that drove price action last week, and also where is the current strength and why. We are seeing a continued strength in some areas, but we did see a sharp drop off in other areas, and you will want to be aware of that. Of course, make sure you're not overweighted in those newer areas that are starting to deteriorate. So here we are with those headline news from last week. And first up, front and center, the Federal Reserve did raise their Fed funds rate by 0.25%. And this was no surprise. Investors had been on the lookout for that. But the big surprise was, and also the Federal Reserve did signal ongoing increases in those rates. But the big news out of that Wednesday FOMC news conference with Fed Chair Powell was the fact that Powell did acknowledge that we are in the beginning stages of seeing inflation decelerate. And that was huge news for the markets. We did experience a Wednesday afternoon rally subsequent to that. And I'll share with you some other areas that moved on that news. However, and then also earlier in the week, we did see the U.S. employment cost index. It did slow. This was another good piece of news because it is something the Fed's on the lookout for. They want the cost of employment to be reduced so that we can further enter into this potential deflationary period. January employment numbers today, however, showed the largest gain in employment in 6 months. So that certainly dampened the rally that occurred earlier, a little bit of a cloud over the markets, and something we need to grapple with. But I will say, given the fact that we've had a significant rally, certainly in the month of January, the pullback was not as severe as it could have been. And as it relates to earnings, big news. Meta platform came out with very, very surprising, not only earnings, but a huge repurchase of share program that was viewed quite bullishly. That was on Thursday, allowed for a nice continuation rally. However, after the close on Thursday, Apple, Alphabet, and Amazon reported their earnings. Mixed results there. We will get more into that as we move forward here today. So let's go ahead and take a look at those markets, and we can see where did we close the week. And here we are with a daily price chart view of the S&P 500, and pointing out to you and highlighting the fact that the S&P did close above the 4,100 level. And this had been viewed as a very impactful, potentially, area of upside resistance. We did break above that on Wednesday, continuation rally on Thursday. Today's pullback, we are still above that 4,100 level. So good news there. Taking a look at these momentum indicators, the RSI above 50, trending higher, and likewise the stochastics up there in positive territory. So we are still looking quite constructive relative to the broader S&P 500. Now let's go ahead and take a look at the NASDAQ. It was the biggest mover this week. I'll share with you why and where. But as it relates to a daily price chart view here, we can see that this index is also in constructive phase here. We did have an overbought condition with the RSI up there above 70 after this Thursday gap up on the NASDAQ. However, today's pullback did put that in a little bit further into a more comfortable level, but still positive, likewise with the stochastics. So very good standing. The NASDAQ again outperforming almost 3 times the week for the week, the performance relative to the S&P 500. So very constructive price action, certainly the NASDAQ high growth area. From here, let's go ahead and drill down a little bit further. Take a look at some of those underlying sectors in the S&P. And this is a view of those 11 sectors 2-month daily price chart view, and I have added an RSI indicator and also sorted it in descending order. So in that upper left quartile, we can see those stronger areas. Now, this is going to be all about not only uncovering strength, but the view that I'm sharing with you today is also very helpful in highlighting rotation as these groups. So up here in this upper left quartile are your stronger areas, lower right are the weaker. And two things here, you're on the lookout for potential movement from these stronger areas and maybe down deteriorating to the weaker, and then likewise as weaker areas move to the forefront. It's a very slow move. It's not going to be whippy, but let's take a look up here at the forefront. Your three strongest sectors: communication services, tech, and financials, as well as discretionary. We'll get into financials, but these three horsemen, if I may, within the growth complex are up there in the forefront. So we are seeing continued vibrancy in these growth areas. And then also, of course, taking a look at some of these weaker areas. And this also is a continuation of what we've seen this year, where staples, healthcare, and utilities, these are your more defensive areas, are languishing down here in this lower quartile. One big movement, certainly, in energy at the end of last year. Let's just take a look at XLE, and from that October, certainly into the end of November, was in a leadership position. We had been in the throes of potentially regaining that prior leadership, but this week's pullback, very significant, high volume, breaking below key support, has kept energy back there down here in this lower quartile. So pretty significant downside action in the energy movement area. And then also, let's go ahead and take a look at some other areas that are moving upward. Financials, I'll share with you in this next view where some of that strength is taking place, but it is very much earnings driven and also interest rate driven. So we'll look at that as we move forward from here. Quick view here of discretionary. Now, this pullback today, a lot of that having to do with Amazon's pullback. This of those mega cap FANG stocks did produce the most disappointing results. Management also guiding lower going forward. So not what you want to hear. So among those FANG stocks, this still, it only pulled back about 3% into today's close, and not highly unlikely given this significant move that we saw from January into yesterday's close. So that is a, certainly I'm sharing with you consumer discretionary, but we will take a look at that Amazon chart as well. So let's move forward. Take a look at some of these ETFs that I use that are within the broader markets and are really powerful as far as pointing you again to where that strength is and where we are seeing potential rotation and weakness. So again, 2-month daily price chart view with that RSI indicator. And here we are with KRE. Now, this is the regional banking ETF, and you can see this sharp move that it's had this week. It was one of the top performers, up 6%. Some of this is earnings related, but an awful lot also having to do with reduced interest rates that are anticipated to propel growth among these banks due to potential lending activity. So nice uptick there. And I will be talking more about this in my MEM Edge report on Sunday and adding a couple of names from this group as they are in very confirmed uptrends. From here, let's take a look at another area that has been strong and remains so, and that is semiconductor stocks, SOXX. Super nice volume here on this upside price action. Today's pullback down only about 2% on less volume. That's what you want to see. We did get into an overbought position. Again, a significant rally. This is a downtrend reversal that we highlighted in my MEM Edge report on January 9th after the release of earnings from a particular company. and it did spur a rally as earnings continue to be released. So it is driven not only by earnings, but more from outlook going forward, whether it's 6 months or 1 year out. And that is generally how these semiconductor stocks trade, very forward looking. From here, let's take a look at software stocks. Another big area among technology, among the NASDAQ IGV is the ETF that I use. And we can see a nice downtrend reversal. And again, a very normalized pullback given that overbought position that we saw. Overall remains in an uptrend with areas that are actually quite vibrant, and that is what we want to see. Let's take a look at one of the reasons that these growthier areas have been moving up here to the forefront. And quite simply, it is the fact that the yield on that 10-year treasury since the beginning of this year had been in a decelerating phase. Lower interest rates, good for growth stocks. Now, today we did get a pretty sharp rally in the yield on that 10-year. Going to be keeping a close eye on that because that is one of those many backdrop areas that can really impact movement elsewhere. And then from here, let's take a look at another area that also saw deterioration over the last 2 days, and that is gold. GLD is the ticker symbol, break now below on that RSI, and then a negative MACD crossover. Pretty big volume over the last 2 days. And from here, I'm going to share with you one of the reasons, and that is this uptick here in the US dollar, which had been deteriorating. This is a good backdrop, certainly for specific areas of the market, commodity related, and the dollar on the move potentially to the upside. I'll be keeping certainly a close eye on that. Brent crude deteriorating, having a lot to do with that decline in energy. So we can see that there's a definite movement beneath the surface. But from here, I am going to share with you a view of what took place in the markets using a map from Finvis. I just don't do this every week, but it is something this week that has particular significance because within the S&P 500, we can see these bigger squares are those companies that have a heavier weighting in the S&P 500, so that hence they have larger boxes surrounding them. And from there, the brighter green indicates a higher upside movement relative to your areas of weakness in this bright red area. So quite simply, you can access very quickly where strength and weakness took place last week, but we can see that those mega cap FANG stocks were on the move and really had a big push and a big reason why we were able to break up above that 4,100 level. Also from here, other areas to highlight are rail stocks and other transportation stocks that are on the move. And that's usually bullish. The Dow Jones Transportation Index trading higher, all about earnings, as it is going to be for most companies that are on the move higher. So from here, I did want to go ahead and share with you some other areas that are on the move. And I was remiss in not adding this to that ETF view, but I did want to show the move that we have seen in small cap stocks. They were up almost 4%. Definitely the biggest outperformer. I'm going to go ahead and pull up a weekly chart and show you the significance here, because the weekly chart of any given index or stock will provide you with that longer term outlook going forward. So on IWM, that's the Russell 2000 small cap index, we can see that we had that move in January up above key resistance. Now, at that time, I was a little skeptical because we had other upside rally attempts that were met with deterioration. But to see this nice continuation rally over the last 2 weeks, clear-cut outperformance this week, high volume, very encouraging. Now we have this MACD moving average convergence, divergence, entering into positive territory as confirmation, with that RSI moving more positively into positive territory. So I will tell you from my screening over this past week and before, I have noted a very big move into small caps that is pronounced and oftentimes very valid, because again, we are in earnings season, so we do want to be aware. We do want to be aware of that. So from here, what I'm going to do is share with you a very quick way to get your arms around those areas in small caps using StockCharts.com. What we can do from here is use this StockCharts technical rating. For those of you not familiar, this Scooter, STCTR, is a ranking, and it's all relative to the underlying chart of that given stock. The higher the number, the better. And it does go up to 99. So from here, I will go ahead and take a quick look at small cap stocks. Now, I will tell you this type of vibrancy is not uncommon. We'll take a quick look at this view, and if it's not really productive, I have another view that can be more productive. So yeah, so a lot of these, some of these smaller names will have super low volume, but what you're on the lookout for is a theme among these small cap names. And I will tell you, having done the screening, that it is primarily medical. It's either biotech or medical products, certainly over this last week. What we can do from here is go ahead and take a look at another view that can give us a bit more in the way of color. So again, StockCharts technical rating, small cap stocks, and what we can see is these super high-rated companies, you will see a thematic move. And again, a lot of these biotechnology companies up here at the forefront on the move, whether it is because they are coming through with FDA or positive clinical trials, but there's a lot of vibrancy within biotechs as these larger cap pharmaceutical companies are on the prowl for buyouts so that they can expand their slowing growth. So that's another reason that we are seeing biotechs on the move in potential anticipation of that. And we can see also some of these smaller pharmaceuticals also trending higher as well. So from here, you can sort it in any other way that you desire relative to, you want to see those higher volume stocks that have the higher Scooter rating. And certainly this particular stock had that big gap up move, but one of the many ways that you can take advantage of this move into smaller cap stocks that has been taking place. From here, I will go ahead and share with you one area that is seeing vibrancy, certainly above average gains relative to its peers in the small cap space, and that is semiconductors. We're looking again at that SOXX, nice high volume as that uptrend continues. And I will share with you a couple of names that are really on the move in this area, and a lot of it having to do with the fact that they are coming out with earnings. Here we are with ALGM. I'm going to go ahead and pull up that full quote so that you can see what I have been seeing. And here we are with the market cap. So this particular company is 8 billion. It puts it more into that mid cap. I'll drill down a little bit further beyond this, but this particular company had a gap up on earnings into an uptrend, super high volume. And again, if you drill down and if we take a look at some of these larger names in the semiconductor space, they are on the move higher. This is Qualcomm. They came out with earnings, dipped a bit, but by and large, these smaller companies are on the move higher. This is AMPG, Amplitech, and it's really tiny. So I'm giving you that spectrum. It's 27 million, but we can see this nice base breakout on high volume. I'm not much of a trader of these lower than $5 stocks, but this kind of move is certainly worth noting. LEDS, it has an 11 million, but let's go ahead and kind of drill up further into more comfortable, and that is this $120 million Pixelworks. And you can see this sharp reversal. When you see stocks in an industry group, and we talked about semiconductors in January, the beginning of January was their downtrend reversal. And if there is a company that begins to exhibit constructive price action prior to the group, they often will go to trade quite a bit higher. So Pixelworks, another small cap name on the move in that semiconductor space. Poet is another one, about 180 million. Not a whole lot of volume, would not be my first go-to, but it is definitely worth noting. One last name here that we can take a look at is CVD Semiconductor, another $100 million stock, big mover, all about being in that correct sub-industry group within semis. There's two areas that are really picking up. They are seeing outsized growth relative to their peers, and CVV had a pullback to its 10-day and is poised to trade higher from here. So we can from here take a look at some other industry groups and the smaller cap names in there that are of interest, and that is IGV. I mentioned to you that software stocks have been on the move, and this is all about that move back into growth stocks. So from here, I will share with you a couple of these smaller names that are of note. Here we are with the full quote view here. This is a $1.8 billion company, MGNI. In that software space, we can see that it had this downtrend reversal into a base breakout. And this is something I've talked about in the past. When you see these companies having a gap up into a base breakout, and you will see that certainly during earnings season, that is a very bullish, very constructive price pattern. And here we are with that gap up that took us into that base breakout on volume, and it did follow this downtrend reversal with that MACD. So definitely one of many names in that small cap area that you will want to be aware of. So from here, I did want to also share with you a move that is taking place among consumer discretionary. So we can just take a quick look again at that chart view of consumer discretionary downtrend reversal. But among consumer discretionary names, because it is a very broad-based group, I'm going to share with you XRT, which is the S&P 500 retail ETF, and take a look. Superior outperformance, nice high volume characteristics that are taking place. And from here, we can take a look at a couple of stocks that have been on the move within retail. We'll begin with a very large cap company that really has picked up here recently. This is Wayfair. W is the ticker symbol. I'm going to pull up a weekly chart to really bring to life just how much this particular name has sold off. And this weekly chart over the last 2 weeks, it has broken above this 200-day simple moving average. Your momentum just now potentially getting into positive territory. And when that occurs on a weekly chart, it is going to have more foretelling as it relates to longer term future potential upside. We're coming out of a very lengthy oversold position. And I will tell you that Wayfair, one of the reasons for this gap up into a new uptrend was all about the companies announcing major layoffs. So you can see that Wayfair is in a very, very confirmed uptrend. This move this week is also very indicative of those stocks that had the biggest moves last week. And I will tell you, having done hours very delightfully of screening, and the biggest movers were those companies that have sold off the most. There's an awful lot in the way of not only bottom fishing, most of those companies that did have these explosive or big moves last week also have growth prospects. So I'll share with you, getting out of this consumer discretionary area for a minute, and share with you some of those other stocks super down and out. And this is software, Coinbase Global. We'll take a look at a weekly chart, and you can get a sense of just how much that particular stock had sold off. So definitely a theme there. And last up, I do want to share with you a group of funds that many of you may have potentially taken off of your radar, and we'll take a look at how they are faring as well. And what it is one area that had been really quite vibrant, certainly coming out of the pandemic, and that is these ARKF funds. I'm going to go ahead and take a look. We're going to pull up, I'm sharing with you a lot of tips and tricks here as well, but we're going to take a look at a 2-month daily price chart of these ARK Invest funds. And this is certainly indicative of an area that really had fallen out of bed, but they are in confirmed uptrends now. And that is ARKF, that's the fintech version, the ARKG, that's genomic. We can see this downtrend reversal taking place more as a reminder of those areas that are really on the move and wanting you to be aware. So here we are with this significant deterioration. Some of these funds down 80+%. And from here, let's take a look at some of these others. And I did intend to add that RSI, go ahead and sort it in descending order. And we can see up here in the forefront, and actually, this is a super vibrant area, autonomous technology and robotics, ARKQ. A lot of talk about this area really coming into its own, and it is ARKQ in particular in a downtrend reversal. Also, the web, so a lot of them have that very distinct similar look, and you can see that they are down and out, but potentially on the move higher. So I will leave it at that. For those of you who have not already, use that link below. You can have a 4-week trial of my MEM Edge report for a very nominal fee. Last week, I put out alert reports on Tuesday and Thursday, as well as the markets began to move around quite a bit, a lot in the way of rotation. You'll have access to all of that by simply using that link below. Have a great weekend. Look forward to seeing you here next Friday.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.